Greg, we've seen no shortage of volatility and uncertainty in the markets this year. So tell me how this has impacted the ETF industry and the way you're playing it at Fidelity.
Well, the ETF industry has always been growing over the last 10 years. We've seen ups and downs. We've seen crises. We've seen strong markets, weak markets. And the ETF has shown throughout the history of the ETF that it's resilient, that it works well in all these different market conditions, that there's different types of products for different types of investors that solve their investment needs. So the volatility or what we see in the market plays well into what the ETFs offer as a huge suite, or as we like to use at Fidelity, a core satellite type of strategy.
Well, it seems like it's playing pretty well into the notion that you need an active ETF to beat the volatile market, because when ETFs first emerged in the 90s, it was all about low cost and passive. Now it's all about active. So is that what you're hearing from advisors?
Yeah, we're seeing a huge amount of growth in active ETFs. I would say the active ETF industry on the equity side has taken off in the last 2-3 years. Now, fixed income active ETFs have been around for over a decade with great success, and we have some wonderful products in that world. But what we've seen in the last 2-3 years is a huge uptake on active equity. We've seen in the last 2 years, active equity flows beaten the flows of a traditional passive index ETF. And so far, in terms of AUM, there's 1.2 trillion in active ETFs. 10% of that is active this year, where last year it was 1 to 2%. So the growth in the area is tremendous.
And what kind of feedback are you getting from advisors that will soon turn into product, I suppose? So for example, there was a need for a crypto ETF. Now you have that. There was a need, I suppose, for buffered ETFs. Those have really started to hit the market hard recently. So what are advisors telling you when it comes to what they're looking for in a product?
They're looking for innovation. They're looking for how to solve a need. We've got a course offering, which is enhanced, which is a lower tracking error, but still active, like an Index Plus. We have a fundamental suite in our core offering, which is higher tracking error, our best thoughts from our active PMs put together in a quantitative manner. We have a satellite, which has single managers, fixed income, thematics, factor. We have our own, FYEE, which is a yield product, an options-based product. We have the crypto. So there's a lot of things we offer our clients to solve their needs. So when we hear from a client saying, I need this, or this is my problem, or this is what keeps me up at night, that allows us to focus on what product they need. Can we deliver it into an ETF form, and where in that core satellite strategy does it fit?
And then clearly Fidelity is a giant of the industry. So if you're going to roll out a product, you're going to make sure that it works before it hits advisors' platforms. So talk about the testing you do, both market testing and just to make sure that these ETFs, these active ETFs that you're putting out there, are ready for prime time.
And we're very conservative. We only do what's best for our client, and we take our role in the market and the industry very seriously. So we would never come out with something that we thought was a hot dot, chasing the easy dollar. It's got to fit the test of time. It's got to fit into our clients' portfolios. And those clients are varied, from institutional to advisor, intermediary to retail. So we might be a little more on the conservative side, but we're very careful with what we bring out, and it has to match our certain qualifications and characteristics.
And when you speak with advisors, how do you counsel them when it comes to, okay, in this circumstance you want active, in this circumstance you want passive, in this circumstance you want a good old-fashioned mutual fund? So how do you play mix and match with these different vehicles and make sure they all stay in the Fidelity family, of course?
Well, we show them different models. We show them different solutions. So we have models that we create. We have SMAs, and to a certain degree, we're wrapper agnostic. We have a strategy that works. We might put it into an SMA. We might put it into an ETF. We might put it in a mutual fund. And it's never either or. People like to be very black and white. It's either ETFs or mutual funds. The answer is probably both. Some platforms, mutual funds work better. And that's why, it's a huge part of our business. Some places, SMAs are great. So we're not really worrying about the wrapper. It's, do we have a strategy that solves your needs? How do we get that? And what wrapper fits best for you in particular accounts? Some accounts are taxable, some are non-taxable. So we have to be very mindful and very thoughtful how we think about recommending product.
And Fidelity, once again, clearly is a giant of the industry. So what can Fidelity do for advisors that smaller ETF offers can't?
Well, our platform is second to none. We're number 2 in the industry in AUA. We have a great amount of tools, information, models, portfolio builders that we can offer our clients, both the intermediary side and the retail side, that will give them the tools for them to make smart investment decisions themselves.
And then finally, we've seen the pendulum swing from passive ETFs, and there's active. Now we're getting things like buffered ETFs, which are chipping into annuities. You're getting crypto ETFs. What should we expect over the next 5-10 years?
I think that innovation continues. ETFs have been known for pushing the envelope and being innovative since the very first ETF in 1994. So I think you'll continue to see that. Some asset classes don't work well in an ETF. So as an industry, we have to think about how do we develop, how do we listen to our clients, how do we push the envelope, how do we think about things on the horizon that we know the regulators are looking at as new product structures, and how does that fit into what we do best is solving our clients' needs.
All right, well, thanks a lot for coming on and talking about it.
Thank you, appreciate it.